Hi team, it's Apex Trades. Hope you guys are doing well. Wanted to talk a little bit about leverage and how it works. I see a lot of people get confused with leverage trading and don't understand what it is and kind of how how the risk parameters are kind of factored in. So just going to talk a little bit about that. Right now I currently have just under $1,000 in my perpetual futures trading account. Current price of Bitcoin is 20,400, thereabouts. Now let's say I want to short the market. My entry price that I want to short at is 20,600, and I'm not trading with any leverage. I want to use 100% of my portfolio, which is the total value here, so 990. It's just a little bit shy of that. What does that look like in terms of my liquidation point? So whenever we talk about trading with leverage, there's a point at which the broker will liquidate your account, so take the full amount of your account to act as a long order to pay any fees and make sure that the broker himself doesn't ever get caught with the fee. So they will trigger an event that will oppose your order. So if it's a buy order, they will do a short. If you've got a short order, then they'll do a buy order. Now it's all relative to how much of your portfolio you're trading with. And for this exercise, we're just going to say 100% of the portfolio. So if we click sell short, so if our trade gets triggered at 20,600 and we've got a sell order in, the point at which we become liquidated, that's not quite correct. Let me just see what's going on here. It's changed back down to 1. There you go. Sell the short. So we're basically, just before I show you this, when we're not trading with any leverage, we're trading with the current value of our USDT. So the current value of our portfolio is 968, which is to say it's 0.047 of a Bitcoin. Yeah. So if I sell a short, or if I'm doing a short at that point, the point at which I'd be liquidated is at 41,508. So let's mark that out. 41,508. Just ditch that. Ditch that. 41,000. 41. It doesn't really. It's somewhere around here. 41,500. I can't get it accurate enough. But anyway, that's the point. So that is to say, for us to lose, as in the broker takes your fee effectively and liquidates your account so you'd have nothing left in your account. The price would have to come all the way up to here, which is a massive move. So the risk level is very, 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 very small. But what happens if I want to use a 5x leverage? Well, at 5x, already we see a massive jump, because instead of now being able to trade with $990, we're now able to trade with $4,861 or 0.23 Bitcoin. So what would that mean if we wanted to put an order in at that point? So same again, we want our order to be in at 20,600. We're using 100% of our account. Let's put the short in. Doesn't execute the short, by the way. Now you see a big difference in the price already. So our liquidation now has jumped from 41,500 down to 24,800. So let's mark that one. 21,800. Sorry, 24,800. Somewhere around there. Yeah, now we can start to zoom in a little bit. What happens if I want to trade with 10x leverage? Well, right now, we're now trading with just shy of 10k, or nearly half a Bitcoin at a 10x leverage. Now, what that gives you is better returns. So when you're trading with a 1-for-1, as in whatever your account's worth, your point per pip or value per pip is relative to whatever your purchasing power is at the time. But obviously, as you increase your leverage, you increase your point or value per pip. So it's like you're trading effectively with nearly half a Bitcoin at a 10x leverage. But of course, what does that mean for the liquidation? What it ultimately means is the risk profile increases. So now, instead of trading with 24,800 as our liquidation, we're now at 22,750. So let's just mark that. 22,750, somewhere around there. A bit lower, somewhere around there. Now, obviously, that now means for us to lose our total cost of our balance here, the price would only have to come up to here. But is the double-edged sword. You can earn more money for your trades, but obviously at risk of losing your total portfolio. What happens if we want to trade at 25x leverage? Well, now we're trading with over a Bitcoin, 1.154 Bitcoin, and nearly 24k's worth of USDT, which means a lot more bang for your buck in terms of your price per point, whether you short or long, depending on what it is. I mean, in this case, we're saying we're going to short at 20,600. So if we was to hit our target and then we started to short, the value of that is a lot more than just trading with a 1-to-1 ratio. But obviously, these things come with risk, and that drops our risk level down to 21,500. Let's mark that. 21. It's around there. I don't have to be too precise. This is just for explaining. Now what we start to see is the risk getting closer to where the price action is. What happens if we wanted to go 50x? Well, at 50x, we're now trading with 2.243 Bitcoin or $46,000. So in terms of your price per point now, it's the anticipation and the lure of bringing it in is it's that double-edged sword. If I guess the degen or the gambler in you really likes the idea, but at the cost of obviously bringing in an increase in your risk of losing your total account. What does that look like? Well, now we're 21,100. Let's map that out. Somewhere around there. Now we're getting dangerously close to where previous price action's been. And remember, our entry price is here. Where my dotted line is. So that's that is not a lot of play. What about 75x? Well, we're now playing with 3.23 Bitcoin or $66,500. Obviously, you're playing with a lot more money, but of course, the downside to that is your risk potential, your risk profile, drops down to 20,984. Let's map that out. Somewhere around there. Now we're in the wick territory of where it's been before, but you are playing with a lot more margin. What happens if we 100x? Well, now we're playing with 87,000 for $1,000 account. We're now playing with $80,000, $85,000, $87,000 or 4.2 Bitcoin. Of course, biggest risk of all, 20,911. It's actually only a little bit smaller. Somewhere around there. So that's really how it is. It's risk to reward ratio. The bigger the risk, clearly the bigger the return on investment, but equally just as risky to lose your account. So play it as you will. When I'm trading, if I'm trading with high leverage, I don't trade with the total amount of my account. I'll trade with maybe 25, so 100x, but I'll only trade 25% of my account, which is to say, you know, if I done a 100x leverage trade, the maximum I would lose is $247. But I'm because I'm only trading with, you know, 25% of my account, the value that I'm playing with is 22k in terms of, or just over 1 Bitcoin. But my order of margin is relatively low. You know, wouldn't take a big move in order to get liquidated on that proportion of the account that I'm trading with. Now, all of these are estimated. You know, when you actually execute your order, depending on the conditions of the market, some of these can be above or below. So just be mindful. You know, I think Qcoin or whatever exchange you're dealing with tries to estimate what your liquidation point will be. So just take that with an air of caution. But I just wanted to explain, you know, what is leverage trading, how does it work, what are the risks, and hopefully I've kind of covered that within this one. So any questions, drop them in the comments. Always happy to kind of help. And with that being said, I will speak to you guys soon.